But just like gold eventually entered this parabolic move, Bitcoin will follow suit. Gold is telling you that the world is concerned about debasement, that it wants to be able to self-sovereignly hold assets. That same story is true for Bitcoin. We're just earlier in burning through this willingness to sell from existing holders. We're going to get through it. Will it be the middle of this year? Will it be next year? I'm not sure, but I think we're going to see the same exponential move we saw in gold. I think gold, as you said, is painting the way. My view on what's going to happen in the alts market is we're not going to have a classic alt season where every zombie coin raises. I think people are going to be insistent on fundamentals, and they're going to distinguish between high quality projects and low quality projects. I think you have projects like ETH and Solana that have clear traction on stablecoins and tokenization will do well. You have projects with strong fundamentals like Chainlink, Hyperliquid doing really well in the last little period. I think those will do well. Zombie coins, I think, will just be overlooked and won't have the same rising tide lifts all boats that we saw in previous alt cycles. There are very rare moments in crypto where the fundamentals are ahead of price. I think we're happen to be in one of those moments right now. You can see that in Bitcoin chasing gold. You can see that in stablecoins and real world assets at all-time highs. While ETH, Solana, Chainlink, and others are not near all-time highs. You can see that in the spike of ETH transactions. As a long-term investor, fundamentals are ahead of price. It's a beautiful thing. That doesn't guarantee we're going up, but I'm pretty excited about what the next couple of years brings.
Matt Hougan's framework begins with a reminder so simple that markets routinely forget it. Prices are ultimately set by supply and demand. Not narratives, not headlines, not sentiment, supply and demand. And when structural demand shifts collide with finite or constrained supply, the price response is not immediate. It is delayed, uneven, and often misunderstood until it becomes undeniable. Hougan uses gold as a living case study to explain what is now unfolding in Bitcoin. The lesson is not about hype or speculation. It is about how long it takes for new demand to exhaust the willingness of existing holders to sell, and what happens when that exhaustion finally arrives. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
So specific to gold and Bitcoin, because I think it's really instructive, the thing to remember is the really simple fact that prices are set by supply and demand. So what's happening in the gold market is when the US seized Russia's assets after they invaded Ukraine, you saw central bank purchases go from about 400 tons to 1,000 tons per year. That was back in 2022. And when that happened, gold's price went up 2% in 2022. And then central bank purchases stayed the same in 23, 24, 25, and looks like they're continuing in 2026, about a steady 1,000 tons. So up from historical norms, but they went up in 2022 and then stayed flat. The price of gold didn't start really running until 2025, right? It had good years in 22, 23, 24, but it started running in 2025. What does that tell you? That tells you that in any market where there is supply and demand, if there is new demand, it has to work through existing holders, right? Central banks caused purchases of gold to be more than net new supply, but there were people who were willing to sort of shovel coal into that fire in 22 and 23 and 24. They eventually ran out and the price skyrocketed. I think the same thing is happening in Bitcoin. We're just earlier in that process, right? Bitcoin entered this structural demand over net new supply when the ETFs launched in January of 2024. If you look at ETF purchases or corporate purchases or combined, it's vastly more than the amount of new Bitcoin being produced. But there were existing people that were willing to sell, particularly as we got to $100,000, which is this big behavioral sell level. We're still working through that sale wall. But just like gold eventually entered this parabolic move, Bitcoin will follow suit. Gold is telling you that the world is concerned about debasement, that it wants to be able to self-sovereignly hold assets. That same story is true for Bitcoin. We're just earlier in burning through this willingness to sell from existing holders. We're going to get through it. Will it be the middle of this year? Will it be next year? I'm not sure, but I think we're going to see the same exponential move we saw in gold. I think gold, as you said, is painting the way. We do an increasing number of meetings with sovereigns. We met with a central bank in our office just a couple of weeks ago. They wanted to talk about Bitcoin, but these guys move like molasses, right? You have to think of the speed at which institutional investors move is slow to begin with. It's slow for financial advisors, which is like the easiest part of the institutional spectrum. As you go up to wirehouses, to insurance companies, to endowments, to sovereign banks, the timeline just blows out. So from what I can tell from the meetings we're having, they're moving on that timeline, right? The demographics are good for Bitcoin. The core fundamental thesis is good, but they just don't move at crypto speed, right? I think we're seeing adoption, but it'll still take years for it to really accelerate. When it does, though, it's going to significantly kink that supply-demand dynamic, and I think it will be another catalyst for Bitcoin.
What are people telling you about the quantum threat, and what's your take on how this thing plays out? Is that another obstacle to major adoption?
Yeah, I agree with you in terms of what it means. The fact that we're talking about it and the fact that there are solutions to it means we will solve it. There's, of course, execution risk and things to worry about, but I don't think it's a fundamental threat to Bitcoin. My honest view is that people raise this excuse when they want a reason not to invest.
Yeah.
That honestly, if price were ripping it, we were all-time highs, you wouldn't have institutions worrying about quantum. We've seen these sort of FUD raises through the 8 years of Bitcoin. People used to worry about Tether. They weren't really worried about Tether. They were just looking for a reason not to invest. And I think that's the same with quantum. Ultimately, we're going to solve this problem. I think Bitcoin has solved big problems before. It will solve this. I think as price starts to accrete, those quantum fears will sort of fade into the background again. Look, I think the first thing which you're hinting at is we had a full-blown bear market last year. Yeah. We didn't experience it because Bitcoin, ETH, and XRP did okay because they had institutional flows from ETFs and from corporations. If you look at everything that didn't have that didn't have ETF support, it got hammered. Even like the fifth or sixth largest asset was down 50, 60%. This is full bore 2022, 2018 bear market. We ran the 4-year cycle last year. We're already at the bottom. I think we're coming back up. My view on what's going to happen in the alts market is we're not going to have a classic alt season where every zombie coin raises. Yeah. I think people are going to be insistent on fundamentals, and they're going to distinguish between high quality projects and low quality projects. I think you have projects like ETH and Solana that have clear traction on stablecoins and tokenization will do well. You have a project with strong fundamentals like Chainlink, Hyperliquid doing really well in the last little period. I think those will do well. Zombie coins, I think, will just be overlooked and won't have the same rising tide lifts all boats that we saw in previous alt cycles. So it's a more differentiated alt cycle, but I don't think it's dead at all. Like, I think high quality projects will do well. I don't think they're overvalued. I just think people will be more distinctive. And I say that as someone who runs an index fund, so I should hope for a rising tide. But I actually think people are going to pick and choose winners in the space, and that we're already through the bear market. I think that's probably the most important piece.
Hougan makes a critical observation. Crypto already experienced a full-blown bear market last year. We just didn't notice because Bitcoin, Ethereum, and XRP were insulated by institutional inflows. Assets without ETF support were not insulated. They were crushed. Many large altcoins fell 50 to 60%, moves entirely consistent with 2018 and 2022 bear markets. In Hougan's view, the 4-year cycle already ran. We already hit the bottom. That does not mean prices go straight up from here. It means the worst of the structural reset is behind us.
I make an analogy to the bond market where you have on-the-run bonds, which are the current liquid market, and off-the-run bonds, which trade at a discount because they're not the focus of the market. I think you have crypto assets that have ETF and futures that have this institutional onboarding, which is the marginal buyer. And then you have everyone else. And if you're everyone else, good luck. I think you have to go like to the far end of the degen spectrum before you find an everything else that will do well. Like, you have to go to privacy coins, which attract just a completely different audience. But everything else needs those futures. They need the ETFs in order to get this institutional market, because If you're an institution, why are you going to go outside that, right? You're just not. Like, you get fired, and they don't want to get fired. So I think that's a big deal.
What's going on with the bill, and what does it mean for markets?
Yeah, it's a complex bill. There are things that the crypto industry wants. There's things that the banking lobby wants. There's things that Republicans want and things that Democrats want. And we're trying to get to a point where the bill is okay enough that no one is angry enough to nuke it. The most recent iteration, there was a lot of hope around January 15th when there was a markup of the bill. But then both the crypto industry and the Democratic side came out and basically said this is unworkable. If you look at Polymarket, the odds are slightly above 50%. I think we're trending in a positive direction. The administration has delivered on most of its core promises on crypto. So absent a prolonged government shutdown, I'm modestly optimistic about clarity. I do think it's really important, though. The mental model I have for why it's important in the market is what clarity does is it puts a legislative sort of foundation on this pro-crypto regulatory tilt we've had under Atkins versus Gensler, right? Absent having legislation, that pro-crypto regulatory tilt could flip again if we have a change in administration. If you want to go into a nightmare world, imagine Elizabeth Warren as the next chair of the SEC, and you can think of sort of what's at stake. If we have legislation, it's cemented and people can build in this market. I suspect what we'll see from a return perspective is if clarity passes, investors will pull forward a lot of value into assets tied to stablecoins, tokenization, and DeFi, because they'll assume, look, this is the way all finance is going to work for the next 10 years. Wall Street's going to build on this. If clarity doesn't pass, they'll have to wait to see if those get real world traction. Because if they get real world traction, even a change at the SEC 3 years from now won't be able to unpeel it, right? If everyone is using stable coins, it'll be like when everyone was using Uber before it was really legal, right? The regulations will bend to fit, but the shape of the curve will be slower because people will insist on that real world traction before they believe it is here to stay and sort of free of the Warren style risk that we could see in 3 years. So far in ETFs, what's primarily been working is single asset products, Bitcoin ETFs, Ethereum ETFs, Solana ETFs. Those have had scale. My view is that over time, what works is multi-asset products. And there are two reasons for that. First, the ability to get single asset products outside of the ETF wrapper is going to improve, right? Charles Schwab is famously trying to allow you to buy it directly. Fidelity is trying to allow it directly. Robinhood will eventually get there as well. So I think the single asset ETP, as much as I love them, as much as they're a big part of our business, is a temporary fix. But multi-asset products, as you know, is how everyone invests in every other category. It's how they invest in stocks, it's how they invest in bonds. Those could be index funds, they could be thematic products, rules-based strategy, active strategies. I think that is ultimately the growth area of the market. The core reason I joined Bitwise is it launched the first crypto index fund. And I looked at what at the time was $1 trillion industry and thought, well, index funds would probably be about a quarter of that. It's like a $250 billion TAM. Now that's close to $1 trillion TAM. We still have the largest index fund, but it's $1 billion, which is crazy to me. I think that category is hundreds of billions of dollars over time. So what's working is single asset. What I think will work is multi-asset, both index and active. And you're going to see us orient our business to serve both. I don't think single asset is going away in the next couple of years, but I think the long-term trajectory is multi-asset. There are very rare moments in crypto where the fundamentals are ahead of price. I think we're happen to be in one of those moments right now. You can see that in Bitcoin chasing gold. You can see that in stablecoins and real world assets at all-time highs, while ETH, Solana, Chainlink, and others are not near all-time highs. You can see that in the spike of ETH transactions. As a long-term investor, fundamentals are ahead of price. It's a beautiful thing. That doesn't guarantee we're going up, but I'm pretty excited about what the next couple of years brings.
Matt Hougan's message is not one of hype or urgency. It is one of structure, patience, and historical perspective. Gold has already shown what happens when sovereign demand overwhelms supply. Bitcoin is following the same path, just earlier, slower, and more quietly. The bear market has already done its work. The sellers are thinning. The institutions are arriving on their own timeline. And while price may lag, the foundation beneath it is stronger than it appears. Sometimes the most important moves begin long before the chart makes it obvious.